How's it going, guys? We're gonna go through a quick market structure. I'm gonna kind of outline and show you guys, hey, this is what I see going on. And with that being said, we're gonna kind of see where the market's gonna go, what's currently the next move for the market, and things we need to look out for, things we need to look towards, and basically market direction. Overall, we'll just look at a macro scenario, right? Not a micro. This is more of a micro. A macro scenario, we're still very, very bearish. Lots of levels, lots of hurdles to get over. Price could come all the way up here to this 33K, and in my eyes, we're still not bullish in this zone, right? We still got this big bear trend. We've got rising volume, dropping price. That's indicating to me that price here, you know, there's probably a lot of price interest in the zone, but I would say that people saying that they know it's the bottom, it's the bottom, so on and so forth, no clue what they're talking about. There's nobody knows the bottom. I don't know the bottom. I can just tell you where price can go. That's basically it at the end of the day. You can take that information and do with it what you will, but that's basically all I'm going to basically be telling you is, hey, this is where price can go. So I've got obviously an alert here set around 16,840. If price gets below this position, that could be pretty detrimental for Bitcoin. Bitcoin could see as low as, you know, 10, 11K if it gets below that position. So that's kind of an alarm position I got set up. So that way, if that happens, I can then follow that and I can kind of, you know, play off of that. But from the micro scenario, right, the current month, current week, couple weeks, people got to understand like the structure being built here. It's very obvious, right? So we've got our higher low here, or our low, sorry. And what we're going to do is we're going to kind of add some stuff here. So we're just going to kind of go here. We're going to do one of these. I'm going to show you guys kind of how to do this too. It's kind of cool. So you guys be able to do this yourself. And in future videos, I'll try to make a video on kind of towards how to use TradingView in a way that makes sense, so that way you can understand how to like set things up. But for right now, we'll just go through here. We'll call this the LO, and then we're gonna take this right here and we're gonna go to settings right here, and we're gonna say bottom, right? Because we're on the bottom, so we want these to show up on the bottom. So we got the LL here, and then we got price here, right? Which would be something like kind of move this there. All right, so with this one, we'll basically call this one the LH. So just so you guys know, LL is low, LH is low high. So that's basically a higher low, right? So that's the way we're gonna kind of designate it. We can go HL, but then it gets kind of confusing. So we'll just go LH for low high. And then we'll come over here, we'll click this. We'll just look at this real quick. Just make sure we got the save LH. And we'll save this as LL. And then if I were to draw a new one, now that I've done that, we're gonna move this up to here, and then we can click that, and we can go here, and we can go LH there. So this is what we have. You have a low, low, high, right? So these are higher lows. So lowest low, higher low, higher low. Price here is higher than price here. Price here is higher than price here. From here, we've got a different scenario, right? So we've got what we would call our high low, right? Or our high. So for this one, we're just going to use text, and that's because this is something different. So this is our high, and then these other ones, we're going to use this. Oh, sorry. We're going to use this. So on this one, we're going to go in here, we're going to go to here, and we're going to say this is our high low, HL. So this is our lower high, And with this HL, we're gonna flip this up to the top. We're gonna say okay. We're gonna then save this as HL. And then we're gonna move this like right there. Beautiful. And we're gonna do the same thing here. So this one right here will be our HL. Again, higher low or higher, sorry. This right here is not HL, sorry. This one will be our HH. And you're probably like, what do you mean this is our HH? Yes, it is. But we want to see if price is building, right? So this was our high, then we went to a high low, and now we're building back to a high again. So price is moving like this, right? Price is moving like this. Bottom price is moving like this. That's an uptrend. Now keep in mind, typically these end up resulting in bear flags. Because typically if the market maker wants to move price up, they want to go down and then break out, right? So we'll just go with this for right now, kind of explain to you guys what this is. So we get our high low, high high, high high. Now, again, we have another high high. Now let's take a look at this. What are you guys seeing with price here? See how price is coming right back to the zone? So price is coming back to retest the previous liquidity. Now, keep in mind, a couple scenarios can happen here. So we've got our low high, our high low here, which is our last high low, by the way, right? So this is our number 3 high low. With this number 3 high low comes another position. So we've got our number 3 high low, and not only do we have our number 3 high low, we've also got what we would consider the BMS zone. And you're probably like, what is a BMS zone? If price gets below this position, it would then at that point form a lower low, right? So this right here would initiate the break in the market structure, because structure is building higher, right? Structure on the highs is building higher. That means that structure needs to maintain this higher move if structure is going to continue moving higher. So this would be the break in market structure zone. Now we're going to look at the order block that was placed based on price moving up, right? So if we look at price moving up, then we would basically look at the support right in here, right? So this order block right here is where I would consider looking at for market structure. So we've got our order block here. So we would call this the OB. We've got our BMS zone here. And then we're going to have our, what we would call, our SMS zone here, right? So this is where our switch in market structure. This is where price switched from the zone. So price switched from the zone, price then came back to retest that zone, and now price may continue through that zone. So we've got the retest in, and this is exactly what I pointed out on my Twitter, by the way. You can always go to my Twitter if you guys want to, and feel free and subscribe. I try to put all this information out there before it becomes a thing. You see right here, I'm showing where price action's already coming back. I've also got FS Group. I just want to plug them real quick. So I also posted this chart as price was all the way up here and told them wait for price to come back. We can then see price retrace. We got the zone. This right here is what I would consider the SMS zone, right? So this is the switch in market structure. This is where market structure changed. Market structure broke out of the resistance and is now finding support on the resistance. This is where things change for the structure. So switch in market structure to the upside. So rather than building in one zone, we have a switch, and now we have to have a reaction. Now the market reaction here is what will matter. So we'll leave that as is. We'll go ahead and call that the SMS right here. And with the SMS, we'll just drag that out a little bit. Then we have the retest zone, right? So you're probably like, what's the retest zone? Well, it's the order block of the previous move. So it's basically where price tested, came up, price then broke through, then retested, right? Came up, then fell under. So now they're trying to come back and capture this liquidity. And you're probably like, what do you mean capture that liquidity? all of this price action up until this move, right? We're just going to bring it down to the move, has yet to have any type of fill. So nobody has come into this price action. This is the fair value gap is what we would call it. And nobody is basically, our price has not been balanced here. So the thing that happened here is that basically buys were offered and sells fell through, right? So the market maker offered buys and the market sold into the market maker. So the market maker now has to come back and rebalance the move. So what does it mean to rebalance the move? Well, it means that price should technically come back into the zone. So we got the move, right? Once price reaches this area, we've got essentially what I would consider over here our 1, 2, 3, 4, 5. It's already occurred, right? So we got the 1 to 2, 3 into the 4, and then the 5. Now, typically after our Elliott wave impulse, right? Our impulse wave, and maybe this impulse doesn't go all the way up. Maybe it just captures some of it. Our corrective wave, our ABC, whatever you want to call it. Or not corrective wave. Sorry. This would be our impulse wave. This is the impulse move, impulse wave, right? So we're getting a solid impulse wave. And with that impulse wave, I would definitely anticipate that we'll get a corrective wave, right? You're probably like, what's a corrective wave? Well, after price makes its move, we then get what we call a corrective wave, which is typically an A into a B into a C. Now price can go here, or the corrective wave could go much deeper, right? But we need to break market structure to do that. So right now we're just going to go with the direction that price can go. So if we look at price, we've basically got our buildup, right? So our buildup's here. So price is going to do one of two things from here. Price is going to move up. Price is then going to retrace. Then price is going to make that final move. Now keep in mind, we've got all of our moves. 1, 2, 3 moves, right? 1, 2, and then 3. If price stays in the zone. From this 3 move, we need to stay here. More than likely, we will consolidate in the zone. Now keep in mind, this is like an upper zone and a lower zone. This can typically mean 2 things. We can basically come up here, and this is the premium pricing zone. This is where the market maker is marking price up. Retail is then buying into that marked up price, and then the market maker takes price back down, right? Or we could see fast moves like we have in the past up here, and we'll get to that in just a minute. Now, what would example, this is what we'll call example A, right? So this is example A. So that's example A. And then I'll give you example B. Example B is price breaks down, more than likely comes back and recaptures the fast move, right? And then price either finds support here and bounces back and continues deeper, or it finds support and consolidates here. But price cannot break the structure. The structure needs to continue up. This is on the daily, by the way. If the structure is unable to continue up, I would then have an issue with this, and I would be like, okay, we've now formed a lower low. We will probably continue, even if price moves back up, to continue to break back down, right? So these are kind of your 2 scenarios. Don't be panic buying. Always wait for the pullback. And that's really the reality here. A lot of people jumped in on this candle, probably bought way up here, and really they could have just waited for the pullback for a lot better pricing. I could show you another scenario that kind of happened previously a couple times, guys. This isn't the market maker's first rodeo or any of that stuff. Look, see the zone, market maker makes a move, can't break through, makes a move, can't break through, grabs the liquidity, right? Grabs the liquidity, pulls back under, retests the bottom, then falls. Market maker makes a move, breaks out, grabs the liquidity, Market maker possibly comes back under, retests the top, and then drops, right? Do you see the move? The market maker has done it up here too. Look, this isn't the first time, guys. Like, this is why people gotta calm down. They gotta calm down, be patient. Look, market maker fails to remove, right? Tests, breaks down, tests, finally breaks out, right? And then there it goes. Same thing right here. So we gotta be careful with these moves. Don't just jump in thinking, hey, everything's good. We gotta understand the way structure is being built and follow structure. Right now, structure looks good though, right? Because here we had a low, right? A lower low, and then a lower low. So price was building down. So in reality, you could have saw this as a breakout, right? And it did break out. But what happened? We caught rejection, right? Over here, price is building higher. Price then breaks out. Then price comes back and corrects. Corrective wave went deep, right? These corrective waves can get very deep in a bear market. We have to understand these corrective waves are the actual price action move. This is what we would call a retrace. This is a retrace to the upside, right? This is a retrace to the upside. This is a retrace to the upside. And you're probably like, what do you mean a retrace? When you're in a down market, the retraces are up, right? Think of it like that. When you're in a bull market, the retraces are down. Price moves up. Look, retrace, right? Price moves up. Look, retrace. Moves up. Look, retrace. Up again. Retrace. Up again. Retrace. Price moves up again. Retrace. We gotta watch for this stuff. Look, over here. Retrace. Then what happens? Price retraces here, but look what price does here. Price moves up. So what are we expecting? Retrace. Price moves up. What are we expecting? Retrace. Or sorry, down. Price moves down again. What are we expecting? Retrace. Price moves down again. What are we expecting? Retrace. This will happen all the way down. There is nothing special about these moves, guys. You have to pay attention to the market and the market structure and understand what the market structure is telling you. The market structure is not bullish really in reality until we even get all the way up into these 40K ranges. Like this, if we start getting above 45, that will be a bullish scenario. And you're probably like, well, then I missed the bottom. You don't know where bottom is. Neither do I. Nobody does. The reality is, would you rather confirm, hey, we have a lot of upside? Or would you rather jump in now and be like, oh, minus 50% of my portfolio, retrace. Hey, we're going to the moon. Oh, minus 50% of my portfolio, retrace. That doesn't feel good at all. Wait for price action to confirm. Wait for consolidation. Typically what you'll see in these markets, when price is in a good range, we will consolidate for months. And then we will see moves, right? We can consolidate an entire zone. We can consolidate this whole zone. Doesn't matter where. But we need to see that consolidation. That's the fact. Over here, 2018. Look, daily, right? I'm gonna show you guys. And you're probably like, oh, I missed this. I'll miss this. No, you won't miss nothing. You won't miss nothing, guys. Yeah, okay. You might miss this little bit. That's nothing in comparison to where Bitcoin went. But at least you had confirmation, right? Because if you'd have bought over here, oh, I missed the bottom. Look how much you would have lost. And this is what people got to really pay attention to. That's a 50% loss to the downside. Basically a 50% gain you could have gotten. So when you think about it like that, you could have bought 50% more of whatever you bought down here versus, you know, losing 50% and then having to watch it go back up and like, oh, okay, yeah, I just hodl. Yeah, you can auto, you can DCA, but that's for another conversation. We'll be talking about pyramids and stuff like that in another video. All right, so with that being said, I would say that's kind of like our current market update. Nothing too crazy, guys. We just really got to pay attention to what's actually going on with structure. Accept structure for what it is. I know it may be boring to trade, but the reality is, you know, do you want to make money or do you want to lose money because you're chasing fast money, right? Don't chase fast money. So a couple key takeaways. If you're looking for a long, you could do it from this position, right? It's a good spot to do it. Just set your stop somewhere below the zone, because more than likely you'll see a move. If they do break down below and stay below, you know, they can come all the way back to there. And this could just be a wick. But the reality is you could see a move and where body starts to close below, then retrace, and then start to break down, right? And if you get that breakdown, then you can get that break back out, you'll get excited again, and then they'll come down further. So you have to be careful with these moves, all right? So with that being said, you know, we got this down move, which has currently happened. That could result in an up, so you could long here. If we break below, volume breaks below, retest the top here, then we could go ahead and probably go for a short if price looks like it's rejecting. You know, usually I do a 1, 2, 3 on the 4 hour or something like that, and I'll be like, all right, 3 candles in, can't get through, we're probably going to come back down. And then from that rejection, more than likely, we're going to come back down and revisit this BMS zone. This order block will more than likely get broken. We'll then come back down and revisit this BMS zone. And then we'll come back up, retest, and then come back down. This is how the market maker soaks the market on the way down and on the way back up. Down, up, down, up, down, up. So that way, every time you catch a short down in here, he can liquidate you, right? Every time you catch a long right up here, he can liquidate you. So be careful trying to margin, trying to trade these markets. Mostly I would spot trade unless you guys are able to read charts. That's just the reality of it. If you guys want to make money, that's the reality of it. With that being said, I'd say that's kind of the current market outlook for Bitcoin. Dollar's still looking really good. I do want to point out, because I think a lot of people are like a little bit overly confident that the dollar's coming down. I got the dollar going to 120, right? I know it sounds crazy, but like you can come all the way down to retest right here. That's our structure. We got a lot of, you'd be like, okay, what about this one? No, this was the pullback. This is just a little stop into the move, right? So they're going to shift back down, re-grab liquidity in this zone, and then basically shift back out. And you're probably like, well, how's the dollar building? It's because people are switching currencies. People are going to the yen, then going to the dollar, then going to the euro, then going to the pound, then going back to the dollar. And that's why the currency is building strength and losing strength and building strength and losing strength. That's why. That tells you that fiat currency is being traded right now in a positive way. Look at price. Look at price. Fiat currency is being traded in a positive way. So if fiat currency is being traded over assets, then you need to be careful with assets, because people will stop buying assets. They'll stop trading assets. They'll start trading fiat currency versus asset. I'm not saying stop. Nobody will stop trading assets, right? But essentially what will end up happening is you'll get more trading volume inside of the dollar, inside of these fiat currencies versus assets, and you'll get better returns on this, and that will shift the market to sell off assets and go into trading these markets. And if they trade the dollar market, the fiat currency market, then you're not going to be looking too good on other assets. Amazon, nice little bounce here, right? Coming up to resistance on Amazon. Like, there's nothing crazy about Amazon right now. Amazon, I expect to come all the way down to here into this. I know it's crazy 65K zone. I just, there's a lot of liquidity down here. Market makers / traders, you know, they're looking for that liquidity. Liquidity's here. We're just setting on top of it. We're soaking the top of it. I think we'll definitely get into these zones, whether it be a wick, whether it be whatever. Lucid looking really good. Look at this recovery for Lucid. Solid support in here. This was a good, I would say this is a good position to buy these right here. In this $18, $16 zone. Remember, Lucid got as low as $13 a share, right? Already up 21, 27. I can see Lucid coming back down here and revisiting this zone because this wick is way down here. Now keep in mind, that's them grabbing the liquidity, right? There's still a lot of liquidity down here. They could definitely go a lot deeper. Look at Disney. Everybody's getting hyped on Disney. There's nothing special about Disney. That's one crazy rally to think that thing is just going to keep going. Markets have like we have to keep in turn and keep in mind the Fed rate hike and everything else. There's a lot of liquidity down here. A lot of liquidity. And they've already broken the support, in my opinion, as far as body candles. So I definitely think Disney can come deeper. I got it coming down that 78 zone, and if the markets get really bad, like recession bad, we could see Disney come as low as $41. Looking at Adobe over here, still very bearish for Adobe. Adobe's not even close to coming out of bearish. Look, this is on the weekly. We're still hitting the bear trend, guys. Like, this thing could even pop out, but it'll probably more than likely wick and just continue it on its way down. All right, so with that being said, basically we've got the other confirmation too. Look, I want you to understand. Look, remember we talked about lows, so we've got our low, right? So the structure again, built, made a lower low, telling us that price will probably come back down. You got the low, you got the low. So we've not only broken structure here, we've broken structure here on Adobe. We've broken structure here on Adobe, and now we've broken kind of the major structure here on Adobe. So really Adobe could rally all the way back up to $430 and something, $430.25, and it wouldn't even matter. More than likely Adobe's going like this. Look, got the breakdown, got the retest, and then Adobe's just going to start coming back down to next support. Next support is a ways down here. I mean, you got Adobe come down to like $200 something basically. I would say if we were going by order blocks, I would be looking for 295.42. If I was looking at order blocks, that's what I would be looking for. I think that's a solid number for Adobe. I think it's something that you should consider. As far as price, if you're looking for a good short, I'll wait till price rallied. Once price rallied, then I would go ahead and take the short on Adobe. I can't see it really breaking out. It's already tried once, rejected. Adobe can come back up and try again. It won't even matter. All right, Google. Google again. Google looks really bad, by the way. I know some people are probably like, what do you mean it looks really bad? Google's basically in a bear flag, which is extremely bad for tech. And that's why like I'm very bearish on crypto right now because of Google. Because they kind of run hand in hand, tech and crypto. Because crypto is tech, right? Software. So we got the uptrend for Google. It's building, consolidating in the zone. We got the dropping volume, right? If we look here, dropping volume, we got the up move. It's looking really bad for Google. And you can see Google's really struggling to really kind of even break the top of this bear flag anymore. It keeps building with no volume. And that's really making me kind of struggle with thinking that Google has any future to keep going up from here. And that we could definitely see these lower positions start to get violated right here. Probably around that OB right here. So this would be an OB right here. And then maybe this down move OB right here, which looks like it's already gotten to that. So I could definitely see them building long here and then coming back down to this next OB. Now keep in mind, Google has a lot of order blocks in here that look really good, right? This one especially, I would say. You got a nice gap right here. This has already been filled, obviously. You got a nice gap right here. And you got this nice drop, right? Your COVID drop over here for Google. So Google could definitely see this. And really this could be on the split, right? So maybe price builds up and then the split breaks it down. Because a lot of people, they buy into splits not realizing that that's just going to become a sell-off. Splits usually typically rally the market, which will be that rally to the top of that bear flag. And then once they rally the market, then the bigger players step in and start selling on retail. And that's essentially what happens in bear markets. So you got to be really careful with Google. If you look here, this is basically March of 2020. This is the COVID lows. A lot of stocks and stuff have already come back to their COVID lows, if not deeper, which makes me really concerned that Google can really see some deep moves on that. And I would say if it's going to come back down to this COVID low, we could definitely see crypto going really deep with Google. But I mean, that's basically a price of $55.64 a share. So keep that in mind too. Let's move over here to Amazon. We already looked at 2 year. So 2 years in my zone. I've been telling people. They keep on denying it. Breaking out 3.846, guys. That's where I got Google. I got this going to. It's going to 3.846. And if we catch rejection here, great. But if not, it's going all the way to 5. It's going all the way to 5. If we break through 3.846, it's going to 5. That's what I would look at for the 2 year. Definitely be careful with the 2 year, guys. This and you're probably like, what do you mean be careful? This is bonds, right? Bonds, when bonds is this high, like this can really entice people to come out of assets and sell off into bonds as a safe haven. So be careful. Tesla, again, my consolidation zone is 549. I've kind of taken the time to go through and grab all the supports and everything like that. And like, even if it's not 549, it's in the 500 range. If Tesla's in 500, I think it's a good price zone. Now keep in mind, this is our March of 2020 lows for Tesla, but I don't see Tesla coming back down to here. As strange as that sounds, I can't see that happening. Too much liquidity in there. So I think like our consolidation zone really is kind of this zone where the takeoff occurred. And I think they're going to come back down, recapture this liquidity, and this will be kind of like your better buying area for me for Tesla. I think that would be amazing pricing. Now, in a catastrophic event, do I think that Tesla can't come back down here? Yeah, it could. These are still young stocks, guys. Look, Tesla 2010. These are young stocks. These could definitely see some heavy volatility. U.S. oil. So I found some interesting stuff. I just kind of took the charts, looked at them, put everything together. But we can see that this was the price imbalance that oil had, right? And a lot of people are ignoring this, haven't talked about it. And this is kind of the wave in between, the reactionary move, right? The down move. And now you got kind of the push. And a lot of people be like, oh, it's due to this, due to that, war, yada, yada, yada. Price action moves how price action moves. That's just it. And it's really weird because you would think that it's related somehow to this event or that event. I think everything just happens. It just happens in time. There's always going to be an equal and opposite reaction to an action. This was the action. This was the drop, right? Oh, sorry. This was the drop. And then this was the reaction. We come back into the zone. I think oil can revisit these highs of $150 a barrel. What would that mean? That'd mean heavy recession. Now, keep in mind, last time we came into the zone, what did we do? We consolidated here. When we consolidated for oil, how long did that take? Well, it took us 1,351 days to consolidate the zone. That's a long time. We could end up here with high prices on oil, right? We could be up here for a long time. Now, keep in mind that with this move for oil, this is the premium pricing. This is not where you're buying oil, guys. Like if you're buying here, you're buying the tops, right? Look at oil's price. Look at oil's price, right? If you wanted opportunity on oil, it should have been in these zones, And I think price will come back down to these zones. It will just take time. Once deflation kind of happens, that's where you'll see oil kind of show. All right, Shopify. Look at that. Rejected right on my zone. Looks really good. Shopify is Look at volume. Look at volume on the drop. It's rising. What's it doing now that it's recovering? It's dropping, right? So we could definitely see Shopify come up, rally, probably maybe even re-peak over here, right? And then come back down again even deeper. You can see over here though, there's some really good support in this zone. I wouldn't doubt that we maybe revisit the zone of $11. We could see Shopify settle here. But I'm gonna show you guys what this looks like without log, because this thing is crazy. Look at this. That's Shopify. I'm saying we can revisit this possibly. Not saying it's gonna happen, but again, these are young stocks. Look, young stocks. You're not a lot of these stocks in the stock market are very young. They're not established like people think they are. We got Twitter over here. We look at Twitter. I wouldn't touch this stock. I'll be straight up. There is nothing that Twitter offers anybody that's worth buying their stock for. Literally nothing. If you look here, again, and that just comes down to use case. Drop, up, drop, up, drop, up, drop, up. And you're probably like, oh, building long, right? Building long. Look at volume. What do you think happened right in here? Do you remember the whole Elon Musk thing? Right? Everybody bought the rumor, and now people are selling the news. Basically, Elon trying to back out of the deal. So be careful. I wouldn't touch this stock. Just stay away from it. Don't touch it. I do like to point it out. I think, man, Twitter's like a $20 stock to me. Like, I wouldn't touch it for anything over 20. Let's see here. Let's go to LTC. LTC is pretty solid coin. Good support up here for a long time. Look, 17, 18. It's kind of held that growth, right? But in reality, you can see LTC's already are struggling over here. LTC could see these bottoms of 18. LTC could definitely come back to these bottoms at 18. And it's pretty crazy because you would think that it's a continual growth, right? But I would say like LTC in the current zone, not a bad zone to buy. I would say that. The only thing a lot of these have me concerned about right now is like, if you look at the growth right here, right? We'll just go with that. You got this move, never comes back to the trend, then breaks under the trend and goes. And really, you can kind of like play with this a couple different ways, go that way. It's still under the trend. So this was the build up, and now it's starting to break down. So it could definitely come back up. It could retest 150 and come right back down again, really deep. Sol, another one, just I have no interest in. Sol's retesting its highs, right? And Sol's another one that's in a bear flag, really just in a bear flag. Now this is a dangerous thing for Sol. Look, this is a decline, right? Declining wedge. So it looks really good. Looks like price action's gonna break out, and price action does break out, right? Now with this one looks really bad because, again, the market maker is building long. You don't want to touch stuff, unless you're getting in and getting out when the market maker is doing these type of moves, because what these build long plays typically play out to be is they typically go to retest the highs, and then they typically come back for the liquidity of the run, right? So this is the market maker building liquidity, retesting the liquidity, and I was thinking that they can get up to 50 for sure, but they didn't quite get there. I thought they would break out and try and catch these wicks, but it looks like they just can't do them. And then they'll push price in the opposite direction while you're buying into it, right? And you'll just keep on thinking that you're going to catch a support, and price will just keep going. So really, I think Sol is at fair value around $3.75. I would buy there. And I know some people are like, oh, they're gonna get mad, but I'm just telling you what price is showing me. I'm not trying to upset people or shit talk your favorite cult or whatever, because you really shouldn't be married to anything. You shouldn't be married to these coins. You shouldn't be married to stocks. You should be married to the dollar. None of it. You just gotta read price action, get your price action, get out. ADA, another one, right? ADA pushed all the way up to 99 perfectly. I knew they were gonna go for this. Look at price action right here. Boom. I knew they were gonna go for this liquidity. So they came back up, hit the liquidity. This is where I'm seeing rejection. So you can see right here the weak move, and this is what a lot of people are probably looking at. They're probably looking at the swing low, which the swing low is good, right? But if I were to take this and I were to bring it down to right there, that's your swing low, right? So this is your swing low. This is your order block right here. That's your order block. What do we do? Price penetrated the order block. Look at that. So yeah, definitely be careful with ADA. Another one I would be highly cautious with. Sorry, Matic, not ADA. My apologies. I'm just saying ADA. This is Matic. And I know a lot of people are like, oh, Disney, yada yada. Look, this move was obvious, guys. Look, this is the order block. That's the order block. Look at price. You didn't even have to know the Disney move. You just had to know where the order block was on the weekly. And price penetrated it perfectly. Right? That's all you got to know. Weekly, monthly, daily. Look for those order blocks. Set up your lines and wait for them to happen on these rallies. That's basically it. Come over to ADA. Oh yeah, ADA is donezo. ADA looking bad. Now, really, I would kind of like to call this a decline wedge for ADA, right? I would like to call this a decline wedge, but the reality is that we kind of got this build like this, right? If you include wicks, and because we got this build like this, it kind of looks like price wants to do this, and this is typically what happens with these type of shapes. It looks like price is doing this, and then price wants to do that, right? And move to the next OB. So I could see, we've kind of tested this whole area of liquidity. I can see us coming all the way down here to this bottom area of liquidity around 15 cents for ADA. So now keep in mind, we are going to probably see a rally for the next month or maybe two, because we have our summertime pumps, right? And the Fed's not going to have another Fed meeting until September after this one. So we might see a rally after the Fed meeting, or we might see a rally before. Well, we're already seeing the rally before. Or we might even go down after the Fed meeting and then start rallying after, right? Just so the market maker can build liquidity for more exit liquidity. And then once that kind of occurs, we'll kind of see those bottoms. The thing we're looking for is we're not looking for a bottom. We're looking for consolidation, right? Once you get consolidation for a period of time, then you can kind of be like, all right, maybe this is a good spot to start DCAing because we've got good solid consolidation. That tells me that the market's probably near a bottom. Not at bottom, near a bottom, right? That's what consolidation tells us. It tells us price has reached the bottom of where it's going to probably go. The market's not willing to sell anymore. Pain's already in. We've got a long period of consolidation. This is probably a good place to start putting in money. Not short period, not a week, not a day, not 1 month, not 2 months, 3, 4, 5, 6 months of just sideways action, up and down in a zone. That'll be consolidation. All right. So we go to ETH. I know a lot of people get excited about ETH. They're super stoked. Look at just people freaking out like, yeah, ETH merge, ETH. ETH is, it's already legged so many. Look, you got the move, you got the pullback, you got the move, you got the pullback, you got the move. This is the top. Now we get our ABC corrective wave. Now keep in mind, ETH looking pretty good though. ETH's looking like it might find support in that 1251 zone. Because why? Because we have solid consolidation, right? So, And when I say top, I don't mean top of market. I'm just saying like top of the move, guys. Like I know we said the same thing about what you got, calling bottoms. So the thing is that I don't like right now is the market maker moved, took a pause, moved, did not retrace. There's a lot of liquidity down here that the market maker knows is there. They built it up long. Everybody jumped on board, and now the market maker just like, just watching price go down, taking all the money, laughing at retail. And they'll probably come all the way back down to retest 1250 at least, right? So we can see price then build down, and this could even take time. So we can see price build down, maybe they bounce around a little bit, and then maybe they consolidate, right? And then maybe they move back up. Or we can see price move down, we can see some consolidation, and then all of a sudden, look, oh, now we're under the switch at market structure. And then, retesting the move. Okay. Oh, look, we got a big rally. We're going to go back up to the moon again. Gotta be careful with these moves. Wait for confirmation. Wait for a pullback before you guys get in there, right? This would be your break in market structure right here. Now, you want me to show you guys something? Remember I showed you guys Bitcoin built long and long and long? This is bad. Why is this bad? Because, look, lowest low, and this is on the daily, right? Higher low. What low is this? Is this a higher low? Or is that a lower low? Looks to me to be a lower low. So if it's a lower low, guess what I'm thinking? I'm thinking we got a reactionary bounce that's going to end really badly for ETH. But hey, who knows at the end of the day? I'm just following market structure. That's it for today. I hope this helps you guys kind of see the market for what it is, and helps you guys make some solid trades. Until next time, guys, I'll see you later. Oh yeah, real quick, S&P, another bear flag. Just want to point that out real quick. Move into the move. Be careful in these markets. See you later.
I've been chasing you like the tail of a dog. I don't get no sleep when we kiss in the dark like we do. I just love the